So 261 to 100. That's the 100 right there for this 261. It's also going to be where the VWAP is as well. So VWAP is the B point. And basically we know that the 261 can lead back to the 188. And that's like another movement that's about 100 points against the trend. It could be very much like the one that we had in short term. We got a ton of blue lines to come back up to, like this too. Like that one, like this one. So those ones there, they're all good. So now we can see we're coming back up to the blue line off the 261. And like I said, the green bar never ends. Just our relationship with it does. And our relationship with it will never end so long as we are below it. Remember that. It can only end the relationship with that green line by getting above it. Mark my words. And I find it quite easy to get back up to it. The shape that we have right now that's very intriguing is very much like this. A spike on the top, and then a consolidation with a spike of equal size on the bottom of it. Yet we haven't returned back to the consolidation. And much of that consolidation was that green bar. Completing that movement back to the green bar with roughly the same kind of movement that we did before. Could be like this. Be appropriate, perhaps. We'll see. Kind of movement would get us back to the VWAP band as well. So I'm not opposed to that. And from that B point there, we can readjust the fibs to notice that we've just responded to a 261, and it may come back up to the 188 area of it as well, which offers another 25 points. And we know that that 25 points could be just sitting underneath a major 188 and so on that has hundreds of points up to the B point. You know, taking the smaller short-term movements up to that level and protecting them is the only way to get exposure safely. Like, I don't know another way to do it. Like, I cannot comprehend another way to do it. But then to do it in the most safe way possible known to man, which is basically to start small and to protect small. And then if it so chooses to become large, then you're safe in the event that it doesn't want to reverse every single time. Capturing exposure to those specific levels doesn't offer, it's not a lot of risk that has to be taken. When you think about how much you have to take on when you get to a major 261 or 188 that has like maybe 300 points or 200 points to the B point, you know, we know that there's not more than 20 points at max that really has to be, you know, exerted to capture exposure to this position, and that there's a good chance within that 20 points you're going to see a profit good enough to be able to drag your stop in a profit. You know, if that stop in a profit is hit and we're still lingering around that same reversal area, are you supposed to be looking for another entry? Oh yeah. I mean, at the end of the day, if it's like, do you want exposure to the thing and do you want to be in from here? You know, it's like, then the aggression needs to be turned up. It's a matter of turning up the frequency of trades that allow for exposure towards that target, and to aggressively make sure that you're being paid on the short-term targets, so that in the event that it continues the falling knife environment, you're safe and paid on every single short-term move that you do take. That's why it should be protected. And we know that the value from the 261 was easy to come back up to that blue line. Now when we get to the blue line, it's going to be easier to break it than it was before, which is interesting. It's like it's created small B points in that little area there. It's testing whether or not people are trading back up to them. You know, it knows that there's a small movement, but it's not like it's not following technical analysis to get back up to those B points, to move right back into that little B point right there. And just because the patterns are, you know, becoming very, very, very small doesn't mean that they're not going to be the significant ones at the low. In the event that we make this the low, we'll be left with all these tiny little B points being attacked, and only those that really cared about them will end up with exposure. And of course, we've managed to hit these B points in here too. They're done. And the only ones that really remain are ones that are above. We've got one more, I suppose, down below, but that's it. It's basically at a red zone. The 261s are very large here and have the capacity, when they break trend properly, to reverse for a significant amount. Obviously, that 261 right there still goes to this same B point. Nothing changed. we know that 261 has the capacity to send us back and forth between that 188, 200, which would actually be a significant movement. So like that's really attractive, at the end of the day. Is it going to get everyone out? Were they trading back up to the short-term B point? Do they value being able to trade back up to the blue and white line? Because it's just taken over as the mean again, and we know it. Like, we know the institutions know this line. Like, look at how it's been used. I don't think that people just have it and are trading back up to it like that. No freaking chance. But the institutions clearly make it visible that they still have respect for that barrier as it's being used so much, so particularly. And it's not like that barrier isn't supposed to be used like that. That's how we do that, isn't it? But some of the most important lines, I think, that we haven't seen that are the most attractive to trade to is that line right there and this line right here. Like that blue and white line, I suppose I can turn it down a little bit because these ones are the ones that are the most attractive and they should be the most visible. That. And the other ones are kind of dimmed out. You can see they used to be blue and white lines, but the ones that are fresh, never having ever been tested, are still in there, visible. But it would make sense for me to put in, like to here, end of day reversal on higher end of day volatility. The point of reanalysis, because that's gonna be where the VWAP band is. And like I said, there's no journey to the VWAP until we break through the VWAP band. And that VWAP band breaking could be in the process of breaking many trend breaks. We've got a lot of those little trend breaks in this area. We're on the yellow one right now. It's been probably the most difficult out of all of the short-term trend breaks because it had that, like, it's inching through the break and then it fell through, making it sort of like a falling wedge that didn't get attacked from the bottom. And I find that very interesting. It's almost like we've taken that distance from that falling wedge, right? And we've managed to make it out of the bottom to the point where it's kind of using the same exact parameters again, but this time it'll have the exact opposite result with a breakout of the other side, likely to be the exact same size or bigger than the first one. So the point where, we can see like that end of day higher volatility, ending up here, no matter what we do in this area here, could be imbalance. It would be very likely to see a movement back to that zone. It's an identifying move of that range. And I know that next time we get into that area, it threatens to become a B point, which is something it didn't have before and something that it does have now. So I'm curious about that, becoming a B point. So this is the test of a red zone, first time test of a red zone underneath the 261. To me, it's an easy trade back up to the 261. So red zone to 261, it could give that exposure to the end of day volatility and potentially the trend break. Like I said, we just saw that purple triangle, that falling wedge, not break out before and it broke down. I'm expecting this one to have the exact opposite result and take us back to the VWAP band. Now, mind you, the movement that we do to get back up to the VWAP band could be a B point of its own, like a W. This could be the first point, like an A point. We have to be careful with that. So we can see now that that literally trading from the red zone to the 261, even beyond it a little bit, is absolutely the movement that it was interested in doing. Now the blue and white lines above become a major interest for continuation. And it all is just like every other short-term trade. Any profits that you can take, you're basically satisfied with taking off some profit now, and that's what you've been paid. The rest of the trade gets stop in profit, and you expect it to get hit. You're not allowed. If you sell it, you lose, though. That's it. And there's no, like, what you lose is you lose your exposure. And it means that there is no way that if it does reverse, you will ever be paid for it. And that's what you throw away. So the measly profit that's left in this trade is not worth throwing away the exposure, because the exposure could be to get to the range where we began the day. Obviously, doing that would be creating a giant W. So we have to consider that as well. And it's not so abnormal in the recent weeks for us to make reversals as difficult. It's nowhere near the institution's beginning point, is my point. which means when we draw back now, it draws back over a lot of the people that were late to the original plan, not actually the place where the institutions began, not affecting the bottom line. But it does recycle a lot of the short-term people. And that can be the goal, to acquire more positions off of them, or to make them get out of their positions so they're not going to be a problem in the future. It could be to make it easier to move in the future. This is why I say, when we get up to those blue lines like that, when we pop up off of such a clear short-term movement, when we go, oh, it's going to go from the red zone to the 261, it's like we can take that. It's an easy trade, like I said, and it's a small one, but we know it's easy to manage, and they do add up. Now, the ticket is going to be to get through the blue and white line. Like something that we haven't seen in this entire range before is something I'm expecting. The falling wedge from before managed to crash through the bottom. This one is hardly doing that. I'm still looking for it to be the opposite of the last one. So for instance, like if I was to simplify it further, I would say that this one was the bearish one, right? Well, this one is the bullish one. Yet it's the same shape and roughly the same point of interest for anyone that wanted value the last time it formed this. Is it not true that in the event we were to analyze the red triangle and ask this green one if it's working as well as the red, what would the answer be? Working how? Well, what was the result of the red one? Is the green one even remotely doing anything similar? No. Look at our friends, still working, eh? Still working. They worked all of this time through all of that difficulty just to show that they were still here waiting for everyone to fuck off. That's really interesting to me. And all of that part, you see that end of day reversal on higher volatility where everything comes back to where the red triangle began? That's what I was talking about. And it was clear, like, I don't even know, 10 minutes ago.
Did the same thing from like Friday as well, like completely exhaust you mentally and then launch on you.
Yeah, exactly. Yeah, because if you give up, then you never even learn on how it's going to reverse anyways. I'm like, it's crazy. It's crazy that giving up is an option. It's like when work is tough for people that have bosses, they don't get to give up, or the boss fires them. And I'm like, it's crazy. It's not even a consideration. They don't even get to think about it. And like school, don't even get to think about leaving, You got to go there right till the end. Every day.
Like in the back of my mind, I just kept thinking about Jim Rohn. He goes, don't be the 90%.
Exactly. So we've done that. The real one is being able to go up to the B points and being able to go up to the larger 188, 200 up there. That's basically the situation. So these movements that we've done here today, in order, I'll place them so we can remember their significance in this domain. It's also ironic that after that 5-wave move, that the same kind of setup that there was in the warning showed people, okay, this is basically the same kind of setup of what we're going to do at 10 o'clock at night. Now we're going to give it to the public, and it gives completely opposite result. But the funny thing is everything that it's done past it, it's likely to just get bought out and made rendered insignificant. All those people that struggled to be long today just end up getting bought out anyways. And I'm like, they don't see it coming, and just the time that they're there is hard for them. And I'm like, it's going to show that they don't have control, that it's too hard for them to stay in, and that this does get rid of them. And that all of the struggle they ever had will be bought out instantly and rendered insignificant. And it was all just to hurt them. Mark my words, you'll see. Everything that we're doing is to be bought out and freaking end up right back at where we started the day. That is what I see specifically happening here, which is ridiculous, if you really think about it. So everything, all the value that all the people showed up for today is basically a means to an end. And sure, after we get back up there, the movement that we had from here has it's always had a very high chance of being overlapped. So we must protect every time. We can't assume that every time we try it's going to be the long-term low. What we can do is make ourselves safe in the event that it isn't. And I'm like, duh, It doesn't matter if it comes down to a new low. Are you not confident in your ability to catch it just like this one? Like this was the falling wedge at 261s. I've got arrows like coming out there like crazy. Other places that I've had arrows with before, we know that there's been ample amount of profit to protect. 70 points off of 188 territory, like with this first arrow, that was about 70, 80 points. You know what I mean? When we get into to other environments, like this is more than we've ever given since we started the trend. Is it over? Well, no counter trend pullback that we've ever done in this trend has been as big as this one. You could say that the only other trend that we've done that's remotely as large is the one that we began the day with, and we're not quite there yet. So what's ironic about that level is that would be the first set of Fibonacci's playing all the way back out to its 100. Now the key with this chart is to only look at what I'm showing at any given time. Like it's not meant to be comprehended on like everything at once. Obviously the market can only respond to so many things at a time. Now there are many things around that we can respond to. We can accept or neglect that. The blue and white line, it no longer is blue and white. Now it's used up. It's old news. We've managed to turn it into an old used up one, I suppose. Same thing with this one. I mean, realistically, I'm just gonna dim them out. This one up here, it's a little bit different because it comes from way back, right? So it can have some sort of chop that might take like all of this time just to freaking, get away from it. Not my best triangle, but still, watch out for further continuation of institutional movements. This is not difficult for no reason. They just definitely don't want people to be lucky on it. Like imagine somebody was trying to get lucky on today's low. First of all, they're gonna have to fucking try all day to be bullish, and they have to survive. Second of all, if they want to find the low, I mean, it does look like a day where all of it is likely to be a wick on the daily. Like the entire day that we have on the bottom, like when you're catching this bottom, it's going to be a wick. It's not like anything but that. You're going to get a wick. That's what I'm looking for. But still, at the end of the day, it'll be a wick, and that's what I'm looking for. There's significance to this movement, and it's a force to be reckoned with. So the VWAP band has been broken. We know what we're looking for when we break that VWAP band. We know everything that we've done has managed to crush through the level there, that green one, and we can move this over here. But it's very important that we can see the value in a day like this. It's hidden from a lot of the people. Definitely is.
And there we go. Kind of like a little 3 drives pattern trying to form, which means that in the future we may see the green zone again. So it's not a certainty, it's more of a risk. The red zone above is what I'd like to see though. So basically come down to attack the green zone. And we all know that green zone is related to a red zone 150 to 200 points higher, depending on whether or not you're looking at the inside or the far side. And it's another day where the institutions clearly made the overnight session valuable again for like 20 times in a row. I would think that people gotta be catching on now, and they're gonna start to try and be awake for it, and it's never gonna fucking move. It's the typical thing, because typically when people try to change their routine or schedule, they'll only change it for like a day or one time. When it doesn't work out, they'll think it doesn't work out forever. You can count on them to act like that. I don't know why they're so weak-minded, but it's just the way they've been taught in life. And this is almost like, the first pattern of the day, where in my opinion it's like a squeeze. Everybody thinks this is the notorious double top. And that's basically the same parameters. And I'd like to see it get to the red zone, obviously above. The double top coming to an end with a failure to reverse. Definitely the slower part of the day. So the theme of the day basically has been to shake everyone off with an expanding wedge, very similarly to the movements we'd get in the morning where it's like sideways up then down. So we're making a full connection with the green zone again. Everything that was outside of it is now brought back out to it. It has the opportunity to become an inverse head and shoulders, it would seem. So even though we made a smaller right shoulder, we could still make a larger one as possible. Nothing changes about the red zone above. That's where I'd like to see it. I'll take my writing from yesterday. This is where I want it. 150 to 200 points higher still remains the red zone. Here's that larger right shoulder that I was talking about not too long ago, trying to push itself out, sort of like a larger inverse head and shoulders. So now we have a new trend as well. Go ahead and put that in. So here we are, trying to break through the green zone again. Green zone still gets grinded. Very, very, very boring. Is this the time that we'll be able to get through the range? Yep. Testing the waters. It's definitely acknowledging that there's a range here. Again, we're trying the top of the green. And again, during the day has been stale, while the after hours session, not so much. I'd like to see this entire spike happen out of the top. That's what I want to see. Yeah, it can sort of be on a blink of an eye, where we stop the chop and start moving. At the end of the day, much of the day has been spent at this exact level, the verge of being in the inside of the range. But yeah, no, I told you so. All of the B points, everything smashed. We're doing the same kind of spike on the other side of the spectrum. So it's just a matter of like literally outweighting pretty much every single person. Again, it's like this.